Hey everybody, Boris, let's begin Forex. Welcome to the weekly technicals for Jan 14th to Jan 19th, 2019. Great to be back with you after a little bit of a holiday break for the New Year's. I wish everybody at Pepperstone very, very happy New Year from both Kathy and I. Very excited towards this year. We start the year with a massive bang. All this volatility from Christmas into New Year's continues in the FX market, which is great for us because it creates lots of different opportunities. But next week, it's really going to be all about Brexit, certainly the front of the week, because Tuesday is the big UK parliamentary vote. I'm jokingly calling this week's technicals as Schrodinger's Brexit because we're sort of in this Alice through looking glass moment right now, where the idea is that probably the Brexit vote that Theresa May wants to pass is going to fail in the UK Parliament. At the same time, even though she's denying it, there's all sorts of talk, the fact that they're going to essentially delay Brexit if this vote fails, because they certainly don't want to fall out of the EU on a hard Brexit note. Nobody, 88% of the UK population does not want that. So you have the situation where essentially UK has voted to take itself out of the EU, but it's not really going to take itself out of the EU, which is why I call it the Schrodinger's Brexit, because essentially it's one of those crazy situations where right now the status quo is the single most positive thing for cable, which is why cable traded so well into the close of the week, ending up, as I talk right now, pretty much just maybe 20 pips off the highs of the day. Now, the levels in the euro, the yen, and the pound really kind of got tested this week to the upside. In the euro, we had a great big breakout all the way through the 15 handle for the first time in about 8 weeks, and then we just could not hold it today. The New York cut was very, very ugly today. Big reversal, second reversal day that we've had since the breakout. That really makes me very nervous. For now, support is 1400. We're going to take a look at the charts here, but I am leery at the fact that the euro couldn't really hold the highs at the 1500. There's still a small upside bias now. You still want to be buying a dip, but it's one of those kind of situations where chasing the breakout has really, really hurt you. Dollar yen still suffering from the flash crash of last week. We're well below the highs we were at the beginning of December. We really shaved a huge amount of trade in dollar yen. And now this 107.50 is going to be the big support level in the pair. We'll take a look at the charts in just 1 second. And then cable is going to be the big story. 2700 is the support, immediate support. 130 is going to be the natural target if we get some kind of positive news on Tuesday, and we'll just play it from there. The economic calendar, for all intents and purposes, really doesn't matter this week, but we'll take a look and see what's on the calendar just in case. It's all pretty much second-tier data anyways, even if there was nothing else on the calendar. But Tuesday is going to be the Brexit vote. PPI on the U.S. side, trade balance out of Europe, that's going to be a snoozer. On the U.K. side, Wednesday after the Brexit vote, we'll get a little bit more inflation data. Again, it's going to have zero impact on real trade because the market is going to probably be reacting one way or the other off the decision there. We do have one big event on Wednesday in terms of U.S., in terms of U.S. economic activity, which is going to be retail sales. This has been a pretty disappointing number more often than not over the last couple of months. This is a key tell because right now, the basic assumption on the pro-dollar trade or the pro-risk trade is that, hey, the markets have been very, very turbulent. They really sold off hard, but the underlying U.S. economy really is fundamentally sound. That's going to be tested, I think, very, very strongly, especially, and this is the key thing, especially against what we're seeing now with the U.S. shutdown. Now, the shutdown is only affecting about 800,000 U.S. workers. That's not a big part of the U.S. working population, but you just don't know the psychological and the sort of knock-on effects that you could have the longer this thing keeps going. So we're going to be watching. I think the retail sales is going to be an interesting tell. If that produces a very strong print, which will be surprising, but if it does produce a strong print, then yes, the economic fundamental argument still stands. If it looks weak, that could be the second or the third sign the U.S. economy is starting to slow down. Dollar yen, 107.50 definitely gets tested in any kind of a really negative print off the retail sales. Building permits, all the housing stuff has been very weak as we go forward, and I don't anticipate that changing in the near term soon. And then we finish up essentially with U of Mich sentiment survey on Friday and Canadian CPI data. Will be interesting to see if that produces any kind of a hot reading or not. And then, of course, also UK retail sales data. That also is very Brexit-laden. If you look at the UK data lately, yes, the services component has been relatively good. Um, Consumer has been relatively steady, but what you see is a massive, massive contraction of activity on the business front. It'll be interesting to see if this Brexit woes are going to start to seep into the consumer psyche as well on Friday. But of course, it's all going to be moot depending on what goes on politically in the UK Parliament. That's going to be the real true trade as we start the week. Let's take a look at the charts here and see how everything sets up on the charts for us. So we might as well start with cable. Now, cable technically looks really good. If you sort of look at this chart here, the first key tell that this was a upward bias trade was all the way from the fat finger crash last week, where cable just came back hard right up to the highs of the day, and then just never saw those lows again. We broke up higher, been consolidating essentially in the 27. There's been a bit underneath 27 every time we dip underneath there. Today's breakout on the news that they're perhaps going to delay Brexit if the vote fails, push us a little bit higher towards the 28.50. But you can see the market really wants to take it up. The default assumption in the market is that something will get done. UK will not leave the customs union. If you adhere to that default assumption, it's a buy to dip trade. But I warn you, because cable is such a miserably volatile trade, and because everything and anything can happen in UK politics, to me, the 2700 is the Maginot line. If we get below that, I don't care whether it's a dip or not. I'd rather be out. I'd rather stop myself out, ask questions later on this trade, because if we have a very nasty turn, this little fat finger trade, which looked like a really great spike low buy, could essentially be forecasting that we may be seeing further lows below 2,500. So it's a political trade. That's why you have to be very nimble. And I warn you that from a technical point of view, 2,700 goes down. I want to be out of the trade at all. On the other hand, the upside really all the way takes us all the way up to 29 to 30. 30 clearly becomes a natural resist because of the SMAs and because of a round number. But between here and there's 150 points, which I think we could easily try to make on any kind of positive flow. Euro, on the other hand, is a very, very negative construct. Look at this. I really don't like the way this traded today. Now, you could just make a case that this was just too far too quickly. We extended above the 20 SMA quite a lot, so it's a natural mean reversion trade back down to the moving average. 1400 seems to be relatively decent support, and I think all of that is legitimate points. Basically, when you look at the chart from a longer point of view, it's all showing a very nice rounded support level. The longer the support, the bigger the range, the stronger the breakout. But the thing is that this first burst of breakout really was a false breakout. It's squeezing a lot of the longs all the way to the downside. Immediate support here is going to be 1400. We break that, that becomes a very, very negative construct, because what that would suggest to you is it's no longer a breakout out of a nice long consolidation pattern, but in fact a double top here, really a double top against this this range over here, and it takes us all the way back down to perhaps a retest of the lows at a 1200. So you know, much as I love to be long euros, the technicals just make me very scary. I don't want to be, I don't necessarily want to make go short the pair, because we could just be sort of shorting right into the bottom support here. But until and unless we come back and close above these highs, which means I got to see 1575, I got to see 1600 on a closing basis to reaffirm that the buy bias is back. I'd really rather pass on any positional trade in the euro for the time being. Yen is also very interesting. Now, yen is an interesting trade because you could take the very, very short risk here. It's a really small risk. You got 107.75, so I don't know, 75 pips here of risk. That's all you got. Because if this indeed is the bottoming of the yen, then this is going to be a nice bottom, and we're just going to try to push ourselves back up towards the 109, and ultimately perhaps even rebuild ourselves towards the 110. The fat finger crash gets erased as we get more positive risk flows. On the other hand, this isn't exactly a wildly positive move here today. We know we've consolidated, we came back up, but it's just it's being capped even as we speak here on these particular flows. Now, into the close, the equities are actually closing relatively flat, right? We're closing almost, we got 15 minutes to go in the New York trade here on Friday, almost at 2,400 on the YM, the Dow. So that's mildly positive, and it's sort of, the market is sort of neutral risk. Next week, we have a massive amount of earnings coming out as the earnings season starts in earnest. That's going to have a big impact. If the earnings start to wobble, or if the warning forward guidance is going to be weak. You could see us coming right back down to 23.50. This comes back down to 107.75. This 107.75 break, that break of that level, is to me a very negative break technically, because if we break that 107.75, we're essentially going right back towards the fat finger lows of last week. So watching dollar yen right now, it's a small risk to take the trade to the long side, but should we break the 107.75, I want to be out of this trade, or even maybe reverse, because I think the flows will then start to go down towards the 106s. Wish you guys the best luck, the best trading. Boris, over now.